Good morning, it's Wednesday the 25th of January. This is your morning update from Phoenix Blue, presented this morning by Tom Colley. It's been a very quiet start to the week. Yesterday, somewhat like Monday, despite there being some significant news in the markets. The significant news I'm talking about is on the pound. We had the EU membership court ruling. This is where the Supreme Court, 11 judges voted and decided that the government had to go back to Parliament in order to authorise the activation of Article 50, being the commencement of the process to leave the EU. The markets took this relatively positively, predominantly because they were undoubtedly priced in the decision, because it was pretty well documented before that the government, even itself, was expecting to lose that vote. However, the positive things from the government's point of view were that the judges also said that they weren't compelled to involve the devolved governments of Scotland, Northern Ireland and Wales in that decision-making process. And also they weren't specific about what they needed to go back to Parliament for in terms of a vote. Subsequent to that, the Brexit Secretary David Davis came out in Parliament and effectively said we're expecting a two-line act which will give the opposition parties very little opportunity to delay the activation or the law going through Parliament. So in all intents and purposes there'll be no delay on what had been Theresa May's stated activation of Article 50 before the end of March. We'll have a look at the pound shortly on the chart and we'll see what that meant in terms of price. The only other news we've had in the, really that was it for yesterday, other than one other thing that came out was President Trump. He has signed something which potentially puts the Keystone XL oil pipeline back on the agenda. Obama from the previous administration has rejected this, but Trump's now put it back on the agenda. He's put a timescale on a decision making on the government's decision-making process. The Keystone XL oil pipeline would be a pipeline from Alberta oil sands in Canada into the States. We saw this have a positive effect on the Canadian dollar, and again we'll see that on the chart shortly. Overnight we had some data out on the Aussie. This was CPI data, came in negatively, and naturally we saw that negative move on the Aussie also. Going forward today, we've the German business climate data, crude oil inventories from the US at 3:30. We have an Aussie bank holiday overnight for European time, and then we have CPI for New Zealand out at 9:45 p.m. UK time. So over to the charts. Dollar index, well, we had a bearish, certainly a bearish move on Monday. We had even a gap down, move down. We had a recovery yesterday to some extent. We're back up around this level of around $100. If we're going to really trade dollar strength, we need to see a move back above this level. Having said that, I'm now of an opinion that in order to confirm dollar strength on the longer term, we need to be above this 101.50 level around here. I see that if we don't break that level, we see that as a potential head and shoulders. That's the left-hand shoulder, the head, and a potential return to that level for a right-hand shoulder, and I've marked on the neckline through there. So although I'll be moves through this area to the long side will be bullish the dollar, in terms of a long-term view, I'd want to see it over that 101.50 level. The yen, obviously, basically on doing very much the same in reverse, bearing in mind our yen strength is to the downside, and we've clearly got a level here, but it isn't a long-term level. It coincides with the level on the Nikkei, which so there is potential that that's going to hold as a bottom. We'll be looking for a move through above this 114. 80 level, I think it is, for a retest to take this back up to the long side in conjunction with the dollar strength. Over on the euro, we're still in this rising wedge that Mark showed you yesterday. You can see I've got an order in there at about 108.50. I'm also interested at about 108.20. Simply because that was a level that I identified last week. I was being cautious here, wanted to encompass that high there within any order, but as you can see, the market hasn't broken that way. If we see the dollar strength play out today, I'll be looking for a move below this level, breaking out of the upward wedge, and looking to trade from this level through here to the downside. Over on the pound, well, yesterday we saw coming up into the Supreme Court decision, we saw a bullish move. Price then reversed, came back down to this 124.10 type level here, and closed the day really at its highs. So we're looking again at some UK strength here. If we see dollar weakness, this will be a market that will be looking to take advantage of with a pullback to this level again here to take to the long side. We do have a COT extreme signal that move through has effectively ignored, so we'll now look to take the trade to the long side until we get to the next significant level. This is about 1.28 here, where potentially the COT signal will still be in place and would still apply, and would then be looking for a reversal back to the downside. Over on the Aussie, well, as we said, we had some negative CPI movement data overnight. That gave us a bearish move through here. You can see I've got an intraday level through there, that very small red line there. I'll be looking for a retest of that and the trend line through there in order to take it, certainly intraday, possibly only down to the 0.75 level. For an end of tail longer term trade, I'm going to want to see that 0.75 level broken. But as with almost everything at the moment, that's going to rely on dollar strength. One market that's looking interesting, gold. We've come up to this key level here. I know Mark talked about that. I've got it about 112.15 at this moment in time. On the daily chart here, we appear to have doubled topped. So I'll be looking for a break and retest of the neckline through here. Again, we need that dollar strength to play out in order to take that back down to this 11.25 type level here. I've got a smaller intraday opportunity marked here as well on a double top from a smaller time frame there, again to the short side, where I'd be looking to get risk off the table on that basis and stop at break even before reaching the neckline on the daily, a double top there. The only other market that we're really interested in at the moment, we've talked about this week, we went long platinum, and we got a nice entry. We got a big push through yesterday as the dollar weakened through the day. The dollar subsequently recovered, it pulled out back. When we got right to this high, to this level here, we took half our risk off the table as profit. We moved a stop to break even. We're now looking for price to break above this level and retest to add in to take to the long side. You can see we're retaining this longer term target here. If you remember, this is a seasonal trade which will cover or has the potential to last right through the first quarter. Okay, guys, that's it for today. Quiet, as we've said, there haven't been a lot of opportunity even intraday to date. If you would like to know more about how we trade, how we analyse, how we use the commitment to traders report, etc., etc., our first free trading event of 2017 is on Thursday the 16th of February in London. It'll be an afternoon event. If you'd like to attend, please email us at info@Phoenix Blue or go through the contacts page on the Phoenix Blue website. We can then send you all the joining instructions, invites, and all the details of what you'll need to come along to trade alongside the Phoenix Blue fund managers. That's absolutely free of charge and without obligation. Okay, guys, that's it for today. Have a great day, and we'll speak to you in the morning. Take care.